Hello all. Blake is going to
Hey,
be.
Steve.
Hey, Stella. Blake is going to be shortly with us. He's going to be a little bit late, but he's going to be here. Um, so, Stella, any news post
Well,
NFTs?
the market actually reaction is what I'm looking at, and the dollar is trying. I mean, obviously, initially it got slammed quite hard. It's trying
Mm-hmm.
to recover, but I really don't see now what's going to stop the dollar just going lower. We're seeing yields now
The
below one
only
and a half
the only
percent.
risk the only risk in my opinion for the dollar move lower in the short term is for the market to reconsider and think that okay, worse, a lot worse than expected data is like
It's
risk
now
off.
bad. Yeah,
Is
it's now
is now bad now.
eventually it will, but is it now? I don't know.
Yeah,
That's the thing.
clearly not my main case scenario based on
Yeah.
what we've had so far. But the only thing that can actually save the dollar is that for the
Yes.
conception about how the market should react to bad data, to in essence change, and the market thinking like something, if it was a little bit worse, would be good because it would still be okay, but would still reduce the probability that the Fed would do something in the near future. But the market might just consider that it was too bad of data.
Yeah.
So yes, that definitely keeps the Fed sidelined. But on the other hand, should we be worried that after all this help and stimulus we get a print like that? Now I doubt that the market is going to end up reaching that conclusion. um, Although I have to stress out here that the low of the day was exactly on the trend line support that we have in the DXY, which is holding for the time being. Now, having said that, I don't think the whole construct, dollar lower, risk assets higher, is in danger of reversing here. I didn't think it was in the previous days. Why should I think of that now? Now, having said that, I'm not sure that the market is going to break out or the dollar to break down in the rest of the hours we have left for the week. Um, that's not necessarily going to be the case, but I think we might get restricted to the daily range that we've had so far in the day for the rest of the session. Anything else that came through the wires having to do with breaking down the number, like why it was much weaker than expected, so on and so forth?
I have to be honest, I haven't really looked into it that much, so I don't know. We also need to mention that we had Canadian numbers. We didn't talk about that. That was quite a bit weaker than expected as well. So and unemployment up from 7.5% to 8.1. So it's same picture than the
Yeah,
US.
which hasn't made really a real dent in the downtrend of the USD CAD, right?
No, because
Uh,
the dollar numbers were
yeah,
worse.
exactly, because the
Hey,
dollar numbers were worse. So
hey, Blake.
What's happening?
Hey,
hey,
Hey.
we got very strong NFPs, but in the opposite direction.
Yeah, I know you guys weren't watching the trader battle that I did with the group. And we actually I was head to head against Chris Pulliver, which he was a speaker at our last Trader Fest.
Yeah,
yep.
yeah, I remember, Chris.
Trade the summit.
Yeah, a Trader Summit. I'm sorry. And he's yeah, it
Trader
was
Summit, by the way.
yeah, Trader Summit. Yeah, with the shirt. So it was an interesting format. It was you're kind of forced into the situation, but I guess the takeaway from watching non-farm payrolls is that was a really weak number. We got to expect that this is going to be a continued, dovish Powell. You know why Powell's been so dovish anyway, and it's like we know that the tapering even conversation when he says it's not even time to start talking about tapering. I mean, when you show a jobs picture like the one that we just saw, how can you argue with that? He knows that that the Fed is what is supporting the U.S. economy right now, and there's no doubt about that now, right?
Yeah.
Yeah.
I mean, so I don't know.
Although since you are now in the mood of it, if you want, I can run you for a spin of a debate. Trying to make the argument that the Fed is actually not supporting but sedating the real economy, but we'll let it for another day.
Yeah, well, and I guess you can think about that from a, are you just by providing the support, you're really killing the economy? I
Yes.
actually tend to agree with that as
Yeah.
well. I mean, I wouldn't disagree. I wouldn't take the other side of that argument and that debate.
I know you wouldn't. I was just kidding. You know what I mean?
But in the Fed's eyes, they have to continue to support the economy. But what happens? I mean, what do? You just continue to, just give people money and, let them sedate them into, thinking, hey, I'm just going to be a day trader. I'm not going to. I mean, how far behind the curve does that put the American working population? That's just, you got all these kids and these whoever just trading and living off of the government. That just kills us as a society, and it's sad to see. And so anyway, yeah, that's a whole
we
other
had
conversation.
Charlie Gasparino before. I didn't want to intervene in the interview, but at some point, Charlie asks, like, where is the inflation? He didn't mean that there is no inflation, but he was just honestly like asking Dale, from your experience, where do you see the inflation? And my answer to that would be the inflation is clearly seen on the fact that people's productivity overall has been seriously hindered and reduced since the beginning of pandemic, but their available money to spend haven't. So when you input less in the pie the economy is consistent of, but you have the same money to withdraw tangible stuff from it, that's where the inflation is. Now,
Yeah.
the benefit for the US economy is the fact that the dollar remains the world's reserve currency, which means that the US economy still benefits from its ability to export inflation. And how do you export inflation? When by money that you print, you actually buy real assets from abroad. And that's where the trade deficit comes in, right? Speaking of which, merchandising deficit of last month was a record high, above $90 billion on a month. That's an all-time high, unsurprisingly.
And it is. Hey, Steve, I'm sure a lot of traders really want to go through the charts really quick, and maybe we can.
Absolutely. Go ahead and take
so
over
let me just work for a few minutes, and then I can have most of the bias chart done probably in about 15 minutes or so.
We're not in a hurry.
Let's come back and let's talk a little bit about the bigger picture, since we are into a Friday, and I'm sure we could really have a good conversation about this. So I'm going to go ahead and start doing analysis, and I know some of you guys had watched the Trader Battle. I hope you guys enjoyed it. Like I said, it was a new venue for me, and if you were in the chat room, I sent out the link. I didn't really talk a whole lot about it because I wasn't sure what to expect. And to be completely honest, I think it's a great event, but we were discussing it. It's hard to do unless you know it's an event that's going to be an explosive one. Like today was non-farm payroll. To do those types of events around inflation data, or it would be a little bit more difficult. Fortunately, we had the data working for us today. They gave us some moves. So let's talk about these moves that we saw. It's no surprise that the dollar weakened, and we saw stocks move higher following the weak numbers. I mean, those were below even the worst expectations out there. I haven't had a chance to look at the revisions yet, but as you can see, the euro pushed right back up to the 121.50, which now you have to imagine a break above 121.50 puts 122 back in place. So I'm going to write down those numbers: 122, or whoops, 121.50, 122 for the euro. And 121, it's actually 121.50. Yeah, it's actually that's the number. And this is going to be an asterisk. And then after that will be 122. And I think we had this yesterday as bullish. And let's go over to support. So support will be any dip back down to 120.80. You have to be a buyer now, I think. I know you could argue that, well, Blake, wouldn't that set up a double top if we just stopped here and we fell back down? I actually would believe that we're going to do something that looks more like this, is we're going to just build a wedge. So I think you have to trade it like this, because like I said, that data was weak. That wasn't like, oh, we created we created 500,000 jobs. No, we created like what was the number, 268 or something like that. I mean, that was not good. So it's hard to be a buyer of dollars when the data is that bad, because that the market is going to be supported by the Fed. So anyway, I think dips back down to 120.80 should offer pretty good support today. The cable. So I was hoping this would pull, some sort of breakout out of this triangle. I want to see a daily close above 139.30, which we're obviously not getting right now, but the resistance here at 139.75 is going to be key. And you guys know I'm not going to make this, I'm not going to turn that bullish until we get a daily close out of that triangle. So right now support is 138.50. I'll actually write it as 138.60. The Aussie dollar, now this is interesting. I played this on the long side. I'm actually still long, but false breakdown led to a breakout. We got a push above the triple top. Everybody was short, looking for the head and shoulder pattern. But the thing is we haven't been able to build on that. I'm surprised. Now, stocks are going to open here momentarily. So we'll see if we can, get some support. I think we have to stay above 77.65 right now. So that's the level of support. And on a close above 78.20 today, 25. Actually, this will be 50. But a close above 78.25 will turn us bullish. Right now, we have to stay in range, because I'm not going to ignore the fact that might be a false breakout. Again, this is early in the day, guys. So what I'd like to see is a daily close above here. Okay, Kiwi. So back up to 73 cents. Channel resistance now comes in at 73.25. Because I think we had 73 cents yesterday, or 73 and change. Let me go look at that really quick. 73. So support will be, dips back down here should be very well supported. $72.10. Okay. Dollar Canadian. So remember, DSI is extreme here, very extreme. It's a bummer because I got stopped out yesterday when we dropped to 121.50 or 121.50, but it's hard. It's hard to be long. I mean, unless stocks completely go, tits up and goes the other direction, it's hard to just be bullish here. I have to assume that any rally back to 123.50 has got, or 122.50 has got to be a selling opportunity. 121.40 is support, because those are the lows down here. 121.42. Actually, I'll write 21.50 because I think that's, you know, what probably needs to happen is we need to just work off some of these oversold conditions technically. Okay. And Steph said blame the Canadian data was a huge miss too. Yeah, and it was. Yeah, the Canadian data was a miss. So yeah, it's both, you know, the US and Canada. I would say that at this stage in the game, if stocks stay elevated, you got to imagine that the dollar Canadian's, you know, going to stay heavy, right? Let's go over to the Swissy. So the Swissy, we hit the 618. We've been writing that down. If you go over to, you know, guys, you guys know I write this analysis every evening, right? Basic technical analysis, unless I'm not here. No change as 90.30 looks to be the next stop. We went to 90.20 and we bounced, right? So resistance now is going to be 90.80. I'm going to write down 90.20 since that's the overnight low. This should probably turn to bearish. And let's go over to US dollar Norwegian krona. Now, we'd talked about 80.25, 88.825 as being support. This week, every morning edge, we've talked about this, that we'd have a support here because we could be developing an inverted head and shoulder pattern, right? The interesting thing is we did go to 8.25, which is support, right? We went to 8.25 and bounced. So that continues to be really key support, 8.25. And I will reiterate that while we're below 839, it remains bearish. But this is one of those that that in the event that stocks, you know, reverse course for some reason, if they do, you have to turn around and look to be, you know, bullish the US dollar Norwegian krona. All right. But right now, that's not the case. US dollar Mexican peso, it slumped finally. I know I talked about this yesterday. I said, hey, the dollar Mexican peso is acting well, but if stocks catch a bid, it's going to eventually come under pressure. We are still creating higher lows as of right now, but we did slump below 20. So we do have to take that into account. Support now is, and this is key support in the dollar Mexican peso, 1978. I have to point out is really important support. If for some reason we break through that, that's going to be extremely bearish, because anybody who's been thinking along the same lines I have, you know, hey, but the dollar Mexican peso has been holding up relatively well. Hey, we should probably, you know, be thinking it's going to bounce at some point. If it breaks through those lows and we start making lower lows again, then that argument is completely off. Resistance now is at 2013. Dollar yen. 108.35. I mean, literally today's low, we dropped to 108.33. I mean, come on. I'm just kidding. Well, that was pretty good, right? That's pretty good. I didn't trade it. It's one thing to make great calls. It's another thing to trade them. Always remember that. It's easy to call crap. You can call crap all day long, but it's the difference is how you trade it. Always. always, right? I wasn't long down there. I knew it was support, but I didn't buy it. You know, my focus was elsewhere this morning. But if your focus was on the dollar yen, then hopefully you paid attention to that. Resistance is at 109. Now, resistance would be at 109.65 still, but now that we're below 109, any rally back to 109 should find resistance. Again, if you're trading it, I'm not. Dollar index. Wow, what a move, right? We pushed below those lows. We haven't been able to capitalize on them yet, but it's early, guys. I don't know if I would be getting long on the dollar, but I will say that this is triangle support. It's huge, huge triangle support. So I'm going to write down 90.40 and I'm going to put in 94.0. That breaks. I know we've been below it today. We've been as low as 90.34. We get a close below that. Yeah, that's not going to be good for the dollar. It's just not. Resistance 90.85. We are on the verge of flipping back to bearish here. Not yet. Not yet. Gold, guess what gold did? It completed the double bottom. So for all of you guys that are Stelios lovers, I love Stelios.
Nobody.
Great call, man. But that double bottom did complete. So you guys just be aware of it. Double bottom, completion. This was the head and shoulder. This is the chart of the day yesterday. It's done. Doesn't mean that we're not going to continue higher from here. That doesn't mean that we can't, you know, go to 1880 to 1900. It's just, this is going to be probably more of a roadblock or a speed bump, right? So today's highs are probably important. 1840, let's just call it 1845. And it is bullish. And while we're above 1800, no reason to be bearish. Silver, almost to 28 or 2780. This is the 618 retracement. So 2780. You know, I know Stelios is really bullish silver. I'm having a hard time being bullish, like outright bullish. But I think if you held a gun to my head, I'd rather be a buyer than a seller. So support will be any dip back down to, I think right now 27. I mean, just while we're above 27. I mean, I'm gonna flip it to bullish for now, but you know, again, can we make that a light green? I know it's like lime green. Can we make it like a lighter green? Can we shade that a little bit? Anyway, Bitcoin, you got to be long for Elon Musk. 60K, and nothing's changed here, guys. 52.4. And then S&P, we should break higher today. We're at 42.20, so we should see 42.50 on a break above 42.25. So I want to write down 42.25, 42.50. It's bullish. Support. I mean, right now support's at 41.85. So 41.10, 41.85. That's it. Your bias chart is finished. We're done. All right, man. I've literally been sitting at my desk for like the last 3 hours, and I took a shower, and I combed my hair, and I've drank coffee. And my goodness, I need to actually get up and move around. But I thought I'd talk to you guys for a few more minutes. So yeah, look at the Dow. I mean, the Dow's moving higher. I don't know how you, I mean, gold's moving higher. DAX is moving higher. Copper's stronger. Gold, silver have given back some of their gains, but still holding up pretty well. Cryptos, Bitcoin's holding up well. I don't know how you could be bearish the dollar or bullish the dollar right now. I just don't. I don't know. So Stelio, Steve, what do you guys think about today's data? Let's dive into that just a bit.
I think, like Steve said, I would have been happier if it was a little bit worse, but now it's a lot worse. But I think the bottom line is there's no way they're going to take the foot off the pedal. I mean, I don't think they will. They had, you know, they may have had excuses to do so, but now they're running out of them. So, and it's not like they don't want to keep going, right, and keep providing liquidity. So I don't see what's changed in the big picture at all now, at all.
Yeah, well, definitely. I mean, the only thing that's really changed, that's really changed anything as far as I'm concerned, is all it's doing is moving out the taper talk further out the curve. I mean, we were thinking, all right, we're going to get past the ECB and the FOMC in June. Then, you know, we're going to start, like, you know, we're going to get hints from Powell that, you know, maybe labor markets have improved and the economy, you know, continues to be really stable, yada, yada, yada. And after that, it's like, you know, how are we going to get that kind of conversation when jobs reports are as weak as they are? And you know, Powell only cares about jobs, right?
I doubt it, but okay. I think he only cares about stocks.
Well, let's just say, in you know, based on his words, he still talks about a very weak labor market, and until that turns, you know, is he going to even talk about taper? I don't think so. And so you have to move that out. Like, what the market is thinking is probably we won't even start tapering until the beginning of 2022 now. And we were really thinking more, the market was really thinking more of November. So, you know, that just gives us 2 more months to get the S&P to 5,000.
Yep, and I'm actually looking at the Eurodollar futures, and let me see when the first hike is priced in. So 60, end of 2022, December 22 is basically the first hike. So I think
I'll take the over if it's okay.
Yeah, that's going to get pushed over further, probably. The question is, what happens with inflation? And you know, we obviously the reported inflation is still low, but we are seeing it everywhere in the cost of new houses, of materials, you know, nickel and iron ore and everything. So everything is becoming more expensive. At some point, this will have to matter. Yeah. So what happens then? What does the Fed do then? That's a very tricky situation.
Right. You know, I don't know. You know, I wonder if at some point, you know, and this is kind of like, you know, what's on my mind doesn't mean that it's doable right now. I wonder at some point the market goes, what the hell? I mean, after all of this support that the fiscal and monetary support that the U.S. government has provided, like I said, from a fiscal standpoint, from a monetary standpoint, yet the data continues to look like crap. At what point do investors just say, you know what, sell it all? And not just the dollar, but how about sell stocks, sell U.S. bonds, you know, sell treasuries and sell stocks. You know, and I've always worried about this pre-COVID pandemic. I was worried we'd get to a point where investors completely shun the US dollar across the board. And that would be a scary place for the US to be in. And I wonder if we ever get to that, if we ever reach that point. You know, that's on my mind. I don't think we're there yet, but it's just something that I think about. Steve, what are your thoughts about that?
I think the construct remains in place because of TINA. There is no alternative, right? So I bet a lot of investors have thought of that multiple times, but then they think to themselves, okay, and what do I do with that money, right?
Right.
And that's quite a scary thought.
You put it in crypto.
You buy cyber kitties. They're only like $1 million each. Come on.
It brings to mind the amazing video. Were you the one that shared it yesterday?
Yes, it was. Yeah.
From Twitter, the guy that
Yeah, right.
put your money in Dogecoin, right?
Dogecoin, yeah.
Yeah.
Anyway, I don't know. It's really, you sit here and you go, man, that was a really horrible data.
It's the game of musical chairs,
Yeah.
As long as the music plays.
Yeah, and here goes the Dow. The Dow continues to rip higher. Here goes here goes the whatever. You continue to just see the markets just plow. Everybody knows that the Fed's just going to continue to provide liquidity, and that's just going to bring up more inflation. Inflation is going to work towards stronger stocks.
And don't forget, it's not only the Fed now, because now we also have, not now, but recently since COVID, with the excuse of COVID, we also have the government that has entered the game with fiscal spending, right?
Yeah.
So we had all the fiscal spending under Trump. We now have Biden that, day in, day out, they're talking about, voting for stuff that in essence ensures more handouts, more spending, bigger government. So temporarily, of course, I reiterate, all these are also risk positive, right? Because temporarily, you get more euphoria, like, oh yeah, there's going to be all that spending coming through, so on and so forth. Of course, in the good old days that economics mattered and people were actually walking on earth because there was gravity, because now we think there isn't, things like infrastructure spending, you say that to somebody that's been educated during the past 20 years in a usual university, they'll think you're an alien. But infrastructure spending was negative growth for any economy in the short term and positive in the long term. Yeah. Why? Because theoretically speaking, for example, to have a plan of infrastructure spending, what you need to do is save up some money to spend. And even if you borrow some money, you take it away from other stuff you could use it in the short term. And for example, we know that infrastructure spending is positive for economic growth, but it doesn't give you back utility immediately. Because, for example, let's say you want to redo roads. That's not something that you press a button and it happens overnight, right? You have to start spending the money now, but in order for you to benefit from the end result, there needs to be at least several months passing, right? Yeah. Of course, nowadays we've reversed everything. Nowadays we think that money to invest are coming from trees, and more or less they are coming from trees. They're coming from the printing press. So, the fact that you're spending now money that you could have spent elsewhere doesn't really matter at all, and you're just looking forward to the GDP increase because you give that money to some people to do work that are working locally, and then whenever the infrastructure plans come to a fruition, then you also benefit from the end result of that. But of course, at some point, everybody's going to wake up to the sad reality of whatever is happening. In any case, having to do with what the dollar is doing and what the markets are doing, I agree 100% with what you said. It's, as long as equities do as well as they do, why would the dollar rebound higher? Or why would the dollar, best case scenario, the dollar at some point is going to consolidate in place, but much stronger dollar with all risk assets being so well bid, I don't see that happening.
Yeah, me neither. Anyway, well, hey, Steve, I'm going to let you take over. I haven't, like I said, I haven't left my desk since 3 o'clock this morning, and it is almost 7 o'clock in the morning.
Yeah, I totally get it, mate.
Yeah, and I actually am going to interview Jim Welsh today. We're going to do like a non-farm payroll kind of breakdown on how he feels about, we were talking, actually, we were discussing yesterday, talking about how he thinks that the dollar is going back down to like 88, 88.50 to complete an AB equals CD. So he's got some charts that he wants to show us. We're going to capture a video and put it on Trader Summit. So for those of you guys, so you guys that remember Trader Summit, I think you're looking at my screen. We're going to be posting videos, and there's content from other people coming. I'm going to be doing quick interviews with people like Jim. I got Bill Barash. He's going to be on with me from Blue Line Futures. I'm talking to Jim Iorio today. You guys see him on CNBC all the time. We're going to be doing these quick little snippets, and you guys are going to get some really good content and great trading ideas moving forward. And you're going to be able to find them all on Trader Summit. So, and then I'll see you guys all in the chat room too, for those of you in the community. So, Didier say we can't share on Twitter. Normal? Share what? Share what? Oh, Trader Summit? Absolutely. You can, yeah. We and actually we have a Trader Summit Twitter handle too. So I think I've retweeted the Trader Summit handle a couple of times this week.
It didn't work. What do you mean? There's no button to share.
Oh, there's no button to share.
It can't be though.
So like, let's say you click. Oh
no. He's talking about the Trader Summit account when we've been.
Oh, look at this. This is interesting. I see what he's saying. So if you're looking at an article, share this with Twitter.
Oh, that part is not working.
Yeah.
Huh.
Thank you, Didier.
Okay.
Thank you. Thank you.
Yeah, and remember, this is for us. We've been building this, trying to get all the pieces together, and this is why it's a soft launch. This is why we haven't done a big
we're not promoting it
like
yet.
We've done in the past, like these big events with like all these keynote speakers, because we're trying to work out all the kinks. So that's why we rely on people like you to find us these little issues. And thank you so much. Really appreciate it.
I mean, you can feel like you just bought a Tesla, right? Most probably things are going to break in your hands. Just let us know what's that going to be.
Okay. All right, Steve, Stelios, thank you guys. I'm going to let you guys take over. Thanks everybody for being with me today and being with these guys. And I'm sure Steve and Stelios have some other great content for you guys.
Thank you, Blake.
Bye, Blake. Bye, mate.
Okay, so interesting move. The dollar tried to bounce a little bit. Metals actually got sold a bit. Silver was negative on the day, but now we're going back up, and equities are just marching.
Yeah, gold is gold. Actually, look at this. Gold
it's outperforming,
almost, yeah, gold. Keep in mind, this 1850 to like 1855 is a super key area of resistance. You can see here why. We have, it might be not so obvious here because it's blue in blue, but we have the 200 daily moving average exactly on top of the 61.8% fib of this last move lower. Speaking of which, let's also fib this and see if there is another fib area worth noting there. Okay, no, there isn't. So, and we also have this channel that has defined this corrective downtrend, which passes just above it. But if we fail in breaking through like within the next like 4 or 5 trading days, then that trend line resistance is also going to be passing from the same area, roughly, what is it, 1851. So key area of resistance. I think we break through that and it's gone. Also, silver earlier on the day tested its 61.8% fib. There you go. You can see it here at 27.66, whatever it is. So as I said earlier, I wouldn't be surprised if we don't break out from the daily ranges that we've already built with this volatile event by the end of the week, by the end of the day, and by the end of the week, which is the same thing. And we pick up from where we left next week. So I wouldn't be surprised if the market, I think if the market doesn't do much within the next couple of hours, it's going to be more or less it. So having said that, the dollar is at the precipice of a breakdown. The Euro USD is at the precipice of a break higher. Here it is. The cable is at the precipice of a break higher. Here it is. The Aussie USD, somebody can even make the case that it has already broken higher there some time ago, and then we had another consolidation. As you see, tested, even spiked above the 61.8% fib, right at 78.56, 78.25, sorry. The Kiwi, here it is, still appreciating within this channel. So, I think that we should stick with the status quo. Now, what was the reaction from yields following the event? Now, the initial reaction from yields following the event was this spike lower that you see. But as you see, we've already retraced almost all of this move. And on top of that, even considering this move lower, and even if we assume that we go back to the lows and we close at the lows that we have already seen on the day, will that change the technical picture having to do with the move that we've seen since we topped out in what was it, in the end of March? No, nothing has really changed, right? I mean, we still had a high over there, and the corrective move lower has, if you ask me, clear corrective characteristics. So I don't think much has changed here. I don't care that we produced a lower low. It's the fact that we've been consolidating and barely, made a dent to the uptrend after a month of more than a month now of correcting lower. So I do think the next move higher is likely to be the next move is likely to be higher once again. And here's the 30-year, by the way. As you see, same deal, same type of formation, right? Actually, the 30-year yield, if you notice, it has now turned to completely unchanged on the day, right? We have a doji. Soon enough, the 10-year might be there as well. So,
by the way,
as I said,
Mira is asking if the 20-year is inverse to TLT. Yes, it is. TLT is an inverse bond ETF.
Yes, so exactly. Exactly. So yeah, that's what I think about it. Now, to answer the usual questions about platinum. Oh, sorry, wrong area. Platinum. Nothing has changed here either. You can see that we're still following this formation. I'm going to turn very bullish platinum if we break through this triangle. But as long as we don't, there is still the possibility of seeing another leg low. We just had some data, by the way. Let me check. US wholesales inventory a little bit weaker. Wholesale sales much stronger
Canadian
than forecasted.
PMI exactly pretty much as expected.
So I don't think any of that is going to move the market now, if you ask me. I mean, the market is still in NFP mode, and that was, by far a more important print. Now, Palladium had a big move lower, which it has already retraced partially. But if you remember, I talked about it yesterday. I said that, listen, there is a chance that we might have topped out in the short term. And why not? We might even see a revisit of like 2,700 before we move higher. But the overall trend to the upside totally remains. Now, the most peculiar thing here is look at copper. Copper couldn't care less. So copper is breaking out both in price and in the RSI. So copper seems, for the time being, remains actually unstoppable. Keep that in mind. I mean, very, very, very strong. Nickel has stalled at the 61.8. I'm really curious to see what's going to happen there. That's going to be, a pivot area that determines if we actually have another leg lower or we're just headed higher from here. Now cryptocurrencies haven't really done much, so NFPs don't seem to have affected them much. Crude still consolidating. Nothing. I see nothing wrong here. I mean, this consolidation for the time being, given the prior move higher, remains a bullish consolidation until proven otherwise. There is a question about natural gas. Listen, natural gas found support at this area of support. You can see here, initially the 200 DMA was also there as well, 50% fib, and it has had a rather nice move to the upside. I'm bullish, right? But admittedly, there are other, commodities that have done much better. So it looks bullish to me, but I'm not sure it would be. It probably wouldn't be my preferred choice to be long. I mean, I see things that are reacting much, much better. By the way, speaking of which, of things that are reacting much, much better, stock indices at the highs of the day. So keep that in mind. 0.5% higher for the Nasdaq, 1.3% higher for Dow, 0.85% higher for the Nasdaq, more than 0.6% higher for the IWM. I think we're going to close this day and this week once again on a positive note having to do with um, risk assets. And as I've been saying, that's a bad omen for the dollar. You want to have a look at the IWM, I see. Nothing has significantly changed here. I mean, there are still the two scenarios, the head and shoulders formation and the symmetrical triangle. You know me by now. What do you think is my main case scenario? That this is a symmetrical triangle, clearly, right? And it has a lot higher chances of breaking to the upside than triggering a head and shoulders formation and signifying that this is some type of a high. Why am I so, um, you know, uh, confident in saying that? Because that's the statistical truth. When you have a clear trend, you should always consider as the main case scenario the one that aligns itself with the trend, and the trend is higher. So, statistically speaking, the chances of this being another bullish consolidation are significantly higher. That's what I think. So, basically, you should remain bullish unless we see a break below this trend line. So, main case scenario, I think a breakout from 230 is going to be um, the confirmation that we're headed higher, in which case I think we should see the index extend towards 250. There is a line from the low to the low yesterday. You mean that one? So which low though? Which is the initial low you're talking about? I mean, yesterday's low is clear because you said it yesterday. This one, this low, the 25th of March low. Yeah, you know what my yeah, I understand what you mean. So let's say this one, right? I don't consider it significant. It's a minor internal trend line. You know what I mean? So I wouldn't be trading off it personally. I see what you mean. I don't think it's that significant. So I care more about these two trend lines, the blue ones. I think those are the significant ones we should be paying attention to at the moment. Okay, PLG and ESG, are these actually tickers, guys? Ingmar, is ESG, what is it? Is it a stock? Let's see. This one? Yeah. Okay. That was an easy buying decision there. Now what the hell do you do with it? I mean, clearly in an uptrend, right? As you see, it has now started mirroring the S&P exactly. So, you know, bullish above, what is it, 100, let's say, roughly. Bullish above 100. But, you know, you see here the RSI divergences and in general the momentum divergences. You see how overbought it is. Would I be chasing it up here? I personally wouldn't be chasing it up here, not unless it has a deeper correction. But if you want to be long, right, don't hold if we drop below 100, because I think we drop below 100, then we open the door for at least a retest of this area. At the very, very, very least. Okay. So yes, it's bullish. You know, I mean, you know, you shouldn't be fading uptrend, so on and so forth. But I wouldn't be buying it here. And if I would buy it here, I wouldn't want to hold it if we close below 100 and a half. Let me have a look at PLG. This looks good, actually. This looks good. This looks really good. Why does it look really good? It's simple. Because first of all, it had a very decent period that it consolidated its prior gains. And then it broke out from a very clean formation, if you ask me. After breaking out, it built another flag that backtested this previous formation. And today it seems to be producing a runaway gap. So, yeah, it looks good to me. Next stop is the spike high at 627, but likely higher. Anything else, guys, gals, before we call it a week? Any other question?
Okay.
Okay.
Thank you, Steve,
Enjoy
for another great
weekend.
week. And we'll speak to you on Monday.
Thank you, mate. So see you all back on Monday.
Thanks, everybody.
Enjoy. Bye.